What's up, DigiCoiners? We're about to embark on an exhilarating journey through the thrilling world of crypto.
Audio Jungle.
It's no secret that Bitcoin has been showing some serious grit recently. It's like that one relentless player in a game who just refuses to lose even when the odds are stacked against them. The recent surge above $30,000 got everyone wondering, why the sudden rise? Let's rewind a bit.
Look, we don't need more digital currency. We already have digital currency. It's called the US dollar, it's called the euro, it's called the yen. They're all digital right now.
Just a month ago, Gary Gensler, the head of the SEC, seemed to be raining on our crypto parade, questioning the need for digital currencies when we already have digitally backed currencies like the US dollar, the euro, and the yen. But as Mark Yusko, the founder of Morgan Creek Capital Management, points out, this may not be a coincidence. Apparently, while regulators were busy warning retail investors about the perils of crypto, traditional finance was quietly establishing their positions in the market. Sounds like a classic trick from the Wall Street playbook, doesn't it? Alright, but why the actual rise in Bitcoin price? Strap in for some major revelations. First, Fidelity Citadel and Charles Schwab have launched their own crypto exchange called EDX. Now, this isn't just a new platform for trading, it's a green signal for institutional players that the crypto highway is wide open for cruising.
First of all, EDX, which is the exchange that Citadel, Schwab, and Fidelity are backing, the important thing that distinguishes it from FTX and Binance and all the stuff we know the regulators don't like is that they're not taking custody. And I want you to understand the importance of this. They're telling you, show up with your own custody solution. We're simply going to be here to match buyers and sellers and handle price. That's probably a step closer to the way traditional exchanges work. We're here at the New York Stock Exchange. They're not holding customer funds. So that's one. Also, they're institutional. They're not recruiting Robinhood traders. So I think that's a big development. And the fact that they went forward with that, given all of the fear and uncertainty and doubt in the asset class, is key. There's credible rumors that Fidelity is readying something seismic. Don't discount those. Abby Johnson has personally been mining Bitcoin since 2014. And then the third development is BlackRock filing an ETF application, and has been pointed out, they've gotten like 500 yeses and 1 no over the years. They're pretty much undefeated. It would be very weird for them to file something just to get, smacked back like the other 30 firms that have filed. So either they know something or they want to make a point in getting rejected.
Here's the catch though. Unlike other exchanges, EDX isn't taking custody. They're saying, bring your own custody solution. We're just here to match buyers and sellers and handle the price. Sounds familiar? That's right, it's pretty similar to how traditional exchanges work. That's not all. Rumor has it, Fidelity is gearing up for something big under the guidance of Abby Johnson, who's been a Bitcoin miner since 2014. Meanwhile, BlackRock has filed an ETF application, signaling more institutional interest in crypto. Let's pause for a moment and remind ourselves of one thing. When regular investors miss an opportunity, that's it, game over. But when big financial institutions miss the boat, they have the power to bring the boat right back.
I think, by the way, I'm sorry, I think this is a sign that Gensler is winning. The revolutionaries are not, it doesn't appear, the revolutionaries do not have any momentum. The firms that have a proven track record of working with regulators and being transparent are the ones that seem to have the momentum now. And I think that's because the regulators are getting their way here. So I want to point out, that's what I really think is happening.
Well, by the way, Doug Sifu, who's been, I think, the most critical financial professional of the SEC and Gary Gensler that I can think of, is on the board of EDX, the exchange we mentioned today, and Virtu is an investor, just to lay that out there.
Ken Griffin, who hates Bitcoin, is his firm's project.
Moving on to the regulators. Right now, it seems like the ones playing by the rules are getting momentum. The entry of big names like Citadel and Schwab doesn't necessarily mean they're championing crypto, but it's clear they see a market opportunity and want to cash in. And finally, let's talk about the cherry on top. Jerome Powell, Fed chair, has stated that crypto seems to have staying power as an asset class. This, DigiCoiners, is no small statement.
So,
post-9 rules.
Powell was on message, just his message of last week.
No surprises.
So what do we do now? What do we do with what he had to say? I mean, he said could get 2 more hikes.
Look, I think every day is an opportunity to make sure that you don't react to whichever Fed head is giving a speech. And actually, Powell's going to speak tomorrow again, and I doubt it will differ very much. So this looks like it was in the realm of expectations. Nobody is shocked at all by the news. But even if they were, you look back at the last 6 months since the year began, and pretty much every quote-unquote Fed speech shocker has been a great buying opportunity. I don't think the Fed has the ability to scare markets lower with what it wants to do with overnight rates, especially when you consider the way we're seeing, number one, economic data surprise to the upside. I can't believe it is, but it is. And then number two, the intermediate term and long-term rates are not really moving on what the Fed has to say. And I think that's indicative of a market that understands that the balance of 23 may not be super red hot, may not be ice cold, somewhere right down the middle. And in that environment, American corporations have already demonstrated that they have enough levers to pull to deliver earnings at least meeting expectations, if not exceeding. And that's the bigger story this year, not what happens with overnight Fed funds rate.
Well, that was quite a roller coaster. We've explored the reasons behind Bitcoin's rise, the moves by big financial institutions, and the intriguing views of the Fed chair. If this ride left you craving for more, don't forget to check out these videos right here. And as always, if you found this journey thrilling, smash that like button and subscribe to keep up with our crypto adventures. This is DigiCoin Daily signing off. Stay curious, stay vigilant, and most importantly, stay excited. Until next time, DigiCoiners.